All right, guys, the Federal Reserve recently announced another 3/4 interest rate hike for the second straight time in an aggressive effort to tame high inflation. Before I go on, let's get clear on what the federal funds rate is. The federal funds rate is the rate at which U.S. financial institutions like banks and credit unions charge each other for overnight loans of reserves deposited at the Fed. It's important to keep in mind while the Federal Reserve does not dictate mortgage rates, it certainly affects them through its monetary policy. You see, the federal funds rate sets the floor for all other interest rates on government and private debt. Changes in the federal funds rate influence other interest rates, but the effects aren't always predictable or in any particular order. So by raising borrowing rates, the Federal Reserve makes it more expensive to borrow, which therefore slows borrowing and spending for both consumers and businesses. The pros to this is that it will absolutely cool the craziness of certain markets and industries, including the real estate market, which has seen a heated frenzy and unsustainable price appreciation the past few years. The drawback, however, is that the economy and real estate market is already seeing a slowdown in consumer spending and confidence due to our all-time high inflation of 9.1%. Many economic experts suspect that we are heading right into a recession if, in fact, we aren't already in one. Although we very much needed this cool down, the impact of the aggressive rate hikes are making it unaffordable for many potential home buyers and have made it unappealing for many others. This is sending our local market for a pretty quick market correction. We are now seeing more properties sit on the market for longer periods of time and price reductions across the board. Although I am hopeful that this market correction will not develop into a crash, it is indeed sending signals of uncertainty to both buyers and sellers. My advice to sellers: make sure that your property is in the best shape possible. It has to look good, smell good, and be priced and marketed well. You need a knowledgeable and aggressive agent with marketing and pricing strategies. My advice to buyers: don't let the uncertainty stop you from making a move. If you are in a good financial position and can afford the mortgage with the new rates, then use this opportunity to find a good deal for yourself. If we are indeed in a recession or headed towards one, then the Federal Reserve will likely lower the interest rates again in the future to get us out of the recession. If and when this happens, you can likely refinance and lower your payment at that time. Remember, no matter what happens, everyone needs a place to live. Interest rates may have the power to slow things down, but people will always need to buy or sell for personal or financial reasons. Owning is still a lot better than renting in the long term. And from a historical point of view, no other asset is safer. Our real estate market is cyclical, and even when we see dips, we know based on historical behavior that it will bounce back. No matter what the market does temporarily, it is my sincere opinion that real estate ownership will always be the best and safest way to build and preserve personal wealth.